The last time South Korea recorded annual growth below 2% was during the 2008 global financial crisis, when it posted GDP growth of just 0.8%. With third quarter growth falling slower than expected, the economy could be on track for the slowest growth in about a decade. Our Hyesung has more.
South Korea's economy grew 0.4% on quarter in the July to September period. That's lower than the 1% growth tallied in the second quarter and the market forecast of around 0.6%.
Private consumption increased 0.1%. Government consumption went up 1.2%.
Private consumption, which generates about half of Korea's GDP, slowed from a 0.7% rise in the second quarter to 0.1%, making it the slowest pace of growth in 3.5 years. The Bank of Korea attributed slower private consumption to falling spending on semi-durable goods like clothing. Government spending increased in the third quarter, but its contribution to South Korea's GDP growth fell 1 percentage point compared to the second quarter. Facilities investment increased 0.5%, but construction investment tumbled 5%.
Third quarter GDP growth was weak due to a base effect, the economy having grown 1% in the previous quarter. Also, the government's fiscal spending weakened in the third quarter. Consumer sentiment and corporate investment were weighed down by the U.S.-China trade dispute and Japan's export restrictions.
Exports have fallen for 10 consecutive months since last November amid slowing global trade. But on quarter, exports increased 4% on improving shipments of semiconductors and autos. Imports grew around 1%. The central bank pointed to changes in the U.S.-China trade dispute, domestic consumption, and the government's fiscal spending as factors that could affect growth going forward. The local economy is unlikely to reach Bank of Korea's growth target of 2.2% this year, and it'll have to expand by 1% in the fourth quarter to hit 2%. Hyesung, Arirang News.